Thank you all for being here. I told Mr. Murphy that typically I'd go around the room and have everybody introduce themselves, but they have a schedule, and you all are here to hear what he has to say, and you certainly don't want to waste time doing anything else, including listening to me. So with that, I'll say we're very, very honored to have the head of the Risk Management Agency, Bill Murphy, with us today. He's originally from Pennsylvania. Still has a farm out there where they've been getting rain, he tells me. Well, we won't hold that against him. And he's joined today by Jasper Grant, the acting director of the FSA here in Missouri. And if you want to introduce some of the folks with you, that'd be great. But what I want to do is get him in front of you. I had a whole list of questions. I've interrupted his dinner by asking those questions, so I'm going to turn it over to Mr. Murphy. He's been with the RMA for 30 years. Spent many years out in the California area working with the Western Regional part of the RMA. So we're proud to have him here. We're honored to have him here. And Mr. Murphy.
All right, great. Well, thank you very much, Grant, for hosting this and help putting it together. I'd also like to thank Jasper and the help FSA has been, on this whole up to date on this tour, seeing what's going on, getting a chance out talking to farmers. Greg Edding is an RMA employee that actually works out of the state FSA office here. So you have one of the advantages. You got an RMA employee right in the state for you. And that's very helpful in a lot of situations. It helps us work back and forth. One of the things I wanted to get out to you is that the effort that the administration is going, and Secretary Vilsack especially, to try to find ways to get additional relief out to growers. I think just a week ago, over 1,000 counties in the country were identified as disaster designations. I think that is probably the quickest and the most ever done before in the program. FSA has done a lot of work in speeding up the process of getting approved for the disaster designation, and we're seeing some of the fruits of that right now. You've also heard about some of the flexibility being provided on CRP, some of the WRP land and EQIP. Wherever we have a chance to get some flexibility, the Secretary is basically having us go research it out, and not so much whether we think it's a good idea, but how we get it done is the question we get asked. So we're not done yet. He's continuing to look for ways to do it. On risk management, usually what I try to explain is that, this is why we exist, is situations like this, when we're into a disaster situation. That's the whole rationale of the program. But even then, he asked, because as you all know, you're expecting, your premium billing is going to come a month earlier this year than normally in the past. That was because of the Farm Bill, 2008 Farm Bill. Last year, money that we usually pay out to the companies was pushed next year, and money that we were usually collecting next year was moved into this year. And so that provided some of the budget savings. So basically what you're dealing with on that change of billing date is to accommodate the budget of the 2008 Farm Bill. Now, what we just did is that we did not change the billing date. The billing date's going to remain the same. All right, so you're going to get the bill about a month earlier. What we did is we're working with the 15 private insurance companies in the program, and what we're doing is asking them to delay the interest penalty that would come on paid premium after the 30 days for it would be October 1 this year before interest attached. We're asking the companies to voluntarily work with us and give it 30 additional days before interest penalty attaches. And that's really what it is in the policy. It's an interest penalty. That was the idea, as to be, have something that would encourage growers to get the bills signed timely. What it amounts to is 1.5% per month onto your premium. That's what you're looking at. Now, if you decide to do that, a lot of questions I get, does that mean I'm out of the program? Am I in sort of some blacklist if it takes me a couple extra months to pay my premium? And no, you're not. You basically have until March 15th next year, but you're going to be paying that penalty every month. So that's March 15th is really the critical date. If you have not paid your premium by then you cannot buy crop insurance for 2013. And so that's what you're looking at time-wise. We have, like I said, we have 15 companies in the program. 10 have already responded to us and saying, yes, they'll voluntarily delay that. They're also getting something out of this. The way our relationship is with the companies is that come that 30 days after the premium billing date, we take the money from the companies, whether you all pay the companies or not. We do it through an accounting transaction. And what we said, in return, any on-paid premium, we will delay 30 days before we take it from you. And so that's the deal we offer the companies. I think they're going to go for it, because otherwise, you can imagine the scope of the losses we're seeing this year, or going to see this year. They're going to be hard-pressed, even with the claims force that they have. Producers are going to want, get out, get my claim done, so I deduct my premium before the interest attaches. So it's actually going to provide them some breathing room, I think. So that's why I think it's going to flow through, and we're not going to have any issues at all. Like I said, 3/4 of them already said, yeah, we'll go along on that. And so that's what that's sort of our, to date, what we're doing to work with providing some flexibility. Another thing that's going to provide some flexibility, but not as much as maybe would have in the past, is one aspect of our program is that if you have a claim over a certain dollar threshold, that you automatically have to have an APH review done on your policy. Last year, that was $100,000. Just a couple of months ago, we raised that to $200,000. All right. Now, I know a lot of folks here, that's still going to be an issue for you. All right. What I'd suggest now is start looking at your records. What the company's going to want to see is going to want to review last year's records with you. If there's no problems with that, and you can show you've got records for the rest of the years, they can stop right there. Okay, if there's a problem in that last year, they're going to go back 2 more years and review that. If you don't have your records, I would suggest that you get them together now. All right, because if you wait till later, well, the elevators are going to be busy if you're missing something, and they're not going to be able to get it to you. And the company cannot pay that claim. They can, but they're reluctant to do so until that review process is completely done. We're going to continue to monitor this. What it ends up being year to year is about 5% of the policies get reviewed on APH. Why we do this, it was to rectify an audit with the Office of Inspector General, who looked at our program. They were very concerned. Originally, what they wanted was an automatic review of anything over $50,000. And we basically said that will not work. And they came back, and we ended up at $100,000. We just changed that to $200,000. Now, what we'll do is we'll continue to monitor the claim activity. If we feel we're getting past above 5%, we have the authority. This is not written in law. We can make some changes. We can make some adjustments. We did that last year. All right, some states that had quite a bit. We look at it on a state basis. And so there is also time we might also be able to do some additional. And I have a feeling the Secretary is going to be watching this very closely as we move forward. All right. I'll touch base on some of the questions that I get asked most recently. The number one is, does Risk Management Agency have the money to pay the claims that are coming this year? All right. In that aspect, we're probably the envy of the entire department, because what our statute actually says is such sums as necessary. All right? So there is no limit on what we can pay out. A lot of people are comparing what we're particularly facing this year back to 1988. In 1988, we ran about a nationwide $2.40 loss ratio, meaning every dollar in premium we paid out $2.44. Corn alone, I think, had about a $3.20. For every dollar in premium we collected, we paid out $3.20. We have a lot more premium now than we did in '88. We have a lot more participation now than we had in '88. I think we had about 40% participation during that period that hit in '88. We're now up to about 85% participation. In the Midwest, farmers insure at very high levels, and they insure revenue. All right. The companies themselves, they share in the risk in our program. I mean, that's whether or not they make money is how the year works for the program. They are all in very good financial shape right now. Since 1995, we've only had about one bad year, 2002. And depending on where you are, it wasn't really nationwide that bad of a year. All right. So they've had underwriting gains over those times. So hopefully they've squirreled some of that money away. All right, and that they'll have it ready. But we actually do an analysis every year, and what we do is that we ensure that every company can take back-to-back $4 ratios or loss ratios, meaning they'll pay out $4 for every dollar they take in premium. They have to be able to pass that stress test before they can even participate in the program. They all do that easily. All right. A lot of the companies also then, after sharing the risk with us, they then move that risk off into the international reinsurance market. And there's a lot of appetite for that risk out there. All right. So I don't see any problem with the finances of the company or the finances of the program overall. So I think you're all in fairly good shape there. One bright lining of 2011 we had last year is that the companies had to really beef up their loss adjustment workforce, and they had to move people all over the country to get the claims paid timely. As a result of that, they have a very experienced, knowledgeable loss adjustment workforce right now. So I think that's going to help tremendously, as opposed to if we would have had a good year last year and not a lot of claims activity. So I think, although this has turned out to be a terrible year, we have no idea on how much we're eventually going to pay out. I think our premium volume is probably going to be about $10 billion this year, maybe $10 to $11 billion. All right. So 2 times that is $22 billion if you have a $2 loss ratio. All right. So I don't see any problem at all. I also get questions on on the revenue portion is how far can that price swing? You know, is there a limit on what? It's actually a 200% increase. All right, so we're fine up to about $10.60, because that's what the price goes to. All right, so I think we got you all covered on that. I don't think that's going to be an issue either. All right, so I think things are going to move along. What I strongly suggest is I've been talking to a lot of people, and they haven't had claims since 1988, basically. The program's changed a lot. All right, so you're probably the loss adjuster is going to ask a lot of questions that maybe you didn't get asked the last time you had a claim. All right, but it'll go fairly smoothly. There's a lot more flexibility in the program than we have ever had before. We have the ability to move along with you on your decision making. But one thing that I make sure I tell everybody, if you're going to do anything different than when you intended when you planted that crop, let your company know. If you're considering abandoning it, because it's such to the point now you don't want to throw good money after bad, call your company. They'll send somebody out to do do an appraisal on the crop out there. If you're going to chop it for your corn for silage, and I understand some guys are looking at doing the same with the beans, is chopping it and feeding them. Call your company. They're going to need to come out and do an appraisal at that time before you do that. If you don't, you're going to have a problem. All right. How bad is that problem? I can't tell you, but I can tell you it's not going to be a good spot. So stay in touch with your agents. Stay in touch with your companies. All right. The agents know these programs pretty well. We have now a very good agent force in this program across the country. They can help you out. They can't get involved in your claim, but they can talk about what some of the impacts of your decisions. Now, I think a lot where we are now, I don't think anybody farms for the programs, but you've got to know what the impact on your decision is on crop insurance. That's why I strongly suggest you stay in touch with everybody. Like I said, we have a lot of flexibility. If the company comes out there and does an appraisal, all right, and you disagree, but you say you want to chop it, or even if you want to plow it under here in a couple of weeks if we don't get rain, all right, there are provisions to leave test strips. You just leave representative strips out there, and we actually saw quite a few yesterday coming down here. And the company will defer the appraisal until normal harvest time, and they'll come in, and that's what the claim will be settled on then. All right. As far as the timeliness, I think just due to the pure volume this year, is that the companies you're probably not going to see loss adjusters out as quickly as we have in the past. But make sure you notify them. All right, if you're on the brink of making a decision, they'll change their routine and get somebody out there to take a look at it. But by the time you get done and all the paperwork, if you harvest and you get your tickets and everything, claims should be paid without a lot of problem within 30 days. All right, so the one nice thing about this program is it does get money back into your pockets pretty quick when you need it. All right. I think also somewhat of a silver lining on this program, of having a year like this, is that a lot of folks are starting to think that farming was just automatic profit. That you plant the seed and then you come back 4 months later and you harvest and you're in great shape. If you read some of the comments around the Farm Bill out of some of the major city newspapers, you see a lot of that out there. I think this is going to make it pretty clear why these programs are important this year. And why you got to be careful by not funding them or only partially funding or thinking you can do away with them completely. I even heard on our program people starting to say, well, you're guaranteeing a profit to these guys. Well, you're not going to have a profit if you forward contracted on a futures market, and you don't have the crop. You've got to come up and buy yourself out of that contract. And that's where the crop revenue program was really meant for, exactly a year like this. All right, so I think it's going to be helpful, but we've been getting some criticism since the Farm Bill started up. We're on the Environmental Working Group's hit list now. They've made some suggestions overall to the program. So I think we're okay. Some of the things we're coming up on the program in the future, I want to leave time because I want to get some questions. I know some of you have some questions, and I want to be able to do that. We're looking, I know a lot of times issues come around T yields. All right, if you need the T yield is used for the plug, basically the county average. All right, the lowest you can get for your future history is 60% of that T yield. Now, if you produce less than the county yield, well, that's a pretty good deal. If you produce over the county yield, that's not such a good deal. We've been testing a program up in North Dakota. The board has recently given authority to expand that program, and it's basically called a personal T yield. Rather than using the county, we use your own history, and that becomes the source of the T yield. The farmers up in North Dakota they have really liked this. All right, so we're working on over the next couple of years to expand that. So that's a change we're seeing. We're working very closely with FSA right now. We're trying to align our programs. You saw this year was the first time we had the same acreage reporting dates, although FSA turned around and extended them. But we are working toward trying to line up our programs together. All right, so that when you look at the experience from each program, it's not like you're looking at a different planet. So that we have the same terminology, whatnot, like that. We want to get to the point that what we want to get to within the next couple of years is if you certify your production at FSA, your agent can download that and use that. If you certify your production with your crop insurance agent, FSA can download that and use it. If you want to do it yourself on a rainy Thursday afternoon and certify it, then both agencies would be able to download that and utilize it. So we're looking for efficiencies in the program, and this is sort of where we're going. We have a lot of work to do. We have a lot of miles to cover. Not all terminology is going to be able to be brought together because we do have different programs. But the whole idea is to push this along as much as possible. And Undersecretary Michael Scuse is the governor that's been really pushing that. Down the road from that, we're working now with all the major machinery manufacturers and their software developers to look for ways that we can use data off of that new machinery you got there and maybe build in some efficiencies into the program as well. For instance, when you're out planting, why cannot that information be sent to your agent or to FSA and that start populating your acreage report? All right. If there's ever a question on your farming practices being done during the year, why can't you just use the data on your machinery to show you went out and you sprayed or did something out there? And be able to verify it with that. And at the end of the year when you're harvesting, why can't that start populating your potential claim right off of that? That's what we're looking at down the road. Like I said, we're in discussions with all the major manufacturers and all the software developers. And basically what the software developers have said is that the problem isn't on your end, our end, the problem's on your end. You need to have standards. You have to stick with those standards. They said, if you come up with standards, we can utilize it. That's part of some of the work we're doing back and forth between the two agencies, is to standardize that data so that we will be able to do it. Now, I also know some folks that say, what happens if I don't want my information being tossed around like that? It's amazing how much your information already is used within the USDA. Well, that would be up to you and it would be voluntary. And the idea is that we would build into some sort of financial incentive if you wanted to do something. So we are looking for ways to streamline the programs and provide additional efficiencies overall in the program. So I think within the next 4 or 5 years, you're going to see a lot of nice changes and a lot of opportunities to get some more. You're paying for that equipment in there anyway, so you might as well get as much out of it as you can. And so we're moving that. Usually when I hear talk about this on the software, the first thing I get, well, calibration is a big issue. If you don't calibrate your equipment, then how good is the data out of that? the software developers say they're going to have that addressed within the next couple of years. All right, and calibration is not going to be a big issue. So we are looking for ways. We have to. We don't have any choice. So with reduced budgets, all the agencies are going to be suffering fewer resources, fewer people. So we've got to find better ways, more efficient ways of doing the program overall. So what I'd like to do now is basically just take some questions from you all. Yeah. If you have anything particular, and you, if you want it, Blake, you can re-ask your questions if you think it's, if you think other people should go. But the program's in good shape. I don't see a lot of problems in it. The Farm Bill has been a little interesting, but I think overall it's in pretty good shape. There's talk of bringing AIG into the crop insurance program, which I know you like so much with FSA. You'll love it with crop insurance. But there's talk of maybe doing that. Conservation compliance. Crop insurance has not been linked to conservation compliance since about 1995. The Senate bill has the linkage built back in. We've been talking to staff saying, look, if you approach this with common sense, it could probably work. If we don't, we're going to have big problems. And so we've been working with staff and others to try to figure out if we have to go down this road, how we can do it. The Secretary has stated that he likes the idea of voluntary compliance. He seems to think that's working. But it's Congress who will decide what the Farm Bill ultimately looks like. So we'll take a look at that. Other than that, Congress seems to like the program. The two big issues that seem to be floating to the top is the deductible in the program. 75% coverage, you still got 25% deductible there. All right, so is there a way to provide some coverage for that deductible? That's one thing they're looking at. And then, of course, the revenue programs work pretty good for the price change within the crop year. But year to year, how do you address those changes? And so those seem to be the two program emphasis on what we're looking at in our program that Congress might want to look at some changes coming up. We don't know how that goes. The Secretary has made it very clear. The best thing Congress could do right now is get the bill signed and get it into law. Coming in, you'll be looking at planting wheat here pretty darn quick, and you need to know what the programs are going to look like. All right, so he's made that pretty clear on a number of occasions in talking to Congress. But what I like to do now is open it up, and anything you want, I'm open to anything. We'll do our best. If we can't address your issues, we'll get back to Blake and the FSA office and provide it via that route.
Questions? Todd and I have talked it over. We're going to have 2 yield monitors, one for the coffee shop and one for
Yeah, there you go.
All right, man. All right, any questions?
I have a question. What about the issue of aflatoxin this year?
Yeah.
Can we address that?
Yeah, all the companies are aware of how to deal. We have to take a sample of that. All right. Your loss adjuster will work with you. All right. Let them know that you think you might have a problem. Under these conditions, this is where aflatoxin comes up. Down in Texas, they have aflatoxin somewhere every year. All right. We don't have an issue down there. What the biggest concern is that somebody not being aware that you have to be sampled on that. That's the biggest issue to deal with out there. There's only so much we can do on it. We try to be flexible in the testing facilities and some of that, but you need to have that. That will be, we'll do quality adjustment on it on different points. So that's a quality issue for the program. But like I said, the worst thing you want to do is harvest and find out you got a problem later. So the companies are all going to be watching this very closely because it puts them in a rough position as well. But the procedure is actually addressed the aflatoxin pretty good now. It depends on how bad it gets, too. I mean, you get up to a certain point, like 300 parts per million, I think you got to destroy it some way. So we'll follow you right along on that. That's 100% loss then. Yeah.
So if you find that you've got aflatoxin in the bin later.
If you got it in a bin and it's only your production in the bin, I don't think there's a big issue with that. I think you can test that and use it. Yeah, you can use the test out of that. Where you run into problems if you're commingling production, that's where you could do. And then just generally, commingling, let your loss adjuster know if you're going to be doing that, because he'll ask you to do some things different for marking the bins and whatnot. All right? But we're going to be putting up our instruction on aflatoxin right on our website here within the next week. That'll walk through how it works. So keep an eye on our website, and it's just www.rma.usda.gov.
Southwest Missouri last year, we had quite a problem with health cops.
Yeah.
And the companies worked well with us.
Yeah.
The one thing I might add is if you're on an enterprise unit, be sure you have samples from both enterprise.
Yeah. Well, that's actually going. There's actually some issue. Some folks are trying to push that we only do one sample on an enterprise unit. But some of these enterprise units are huge. I mean, it's to your benefit, I think, to get the proper sampling done. You know, it might take a little bit longer, but you're going to be better off with the proper
You
sampling.
basically left samples in the field.
Right. Yeah, that's another way to do it. Sometimes the loss adjuster will be out there with the guy, and he'll be taking sampling as he's harvesting. So there's different ways to do it. Yes?
Is the $200,000 per crop like it was $100,000
Yeah.
last year?
Yeah, it's the same basis. Like I said, we're going to continue monitoring it. If we're getting up into too high in numbers, we'll adjust to the companies. We'll get word to the companies that they can back off from doing APH reviews. There's another one on top of that, $500,000 claims. In a situation like that, the companies have to notify the regional office for RMA, which for Missouri is Topeka. Topeka has, I think, 3 days, is it, to decide if they want to go out with the company on a claim. All right. We don't have that many resources nationwide. We have less than 400 people. I think we have a total of maybe 100 in the field offices. So they can't do too many of those. Usually they'll pick one that they want to see certain conditions or certain issues are being handled. But that usually does not slow down the claim process at all. It's only we have the option of being there with the company. Yeah.
You said on your records that they would probably want last year's, maybe previous year's. If
Yeah.
you had claims the last few years.
They still want to see. Yeah, they still want to see the records.
Use
Yeah.
their access, or you still have to have all that?
You got to have it with the claim. Yeah. Yeah. We're trying to build. I mean, some people end up with having 2 years in a row. I think that's a little silly. I'm hoping to build some flexibility in those procedures down the road. I think if you had an APH review done the year before, it's kind of what's the use of doing another one unless you had a major problem. So we're looking for putting some flexibility in the program along those lines as well. But you got to think APA, the actual production history is the cornerstone of the whole program. And if we have problems with that, that means the whole program is going to end up with problems. So it's really a program integrity issue. Usually we don't see big problems. It ends up being a guarantee issue. I mean, usually the impact on the guarantee is pretty small after you go through all of this. But the audit agencies are pretty adamant that this is the cornerstone of the program. If there's problem with that, you've got problems throughout the whole program. You know, so the pressure is going to stay on that we do it. Yeah.
Just, the records are there. It's just time.
Putting it, yeah, I know, yeah. And people get upset about a couple bushels, and you have to go through all that. I know. Anything else, son? Want to bring up? All right. Yeah.
I think Bill said that they will
We'll
be
stick
here
around.
for a
Yeah.
minute or two. If you got questions you want to ask, we're uncomfortable asking in front of the crowd. I know we got some press here. We're thankful for all of you being here, and I imagine all of you have a chance to visit with Bill. A special thanks to Jeff Adams, Greg Gaines, Dan Castee for putting this thing together in about 48 hours. Thanks to
Yeah.
all of you for coming, and particularly want to thank Bill and the folks from the RMA for being here, because it's really been helpful for me,
Okay,
and I'm
thank you.
sure everyone else as well. So thank you very much.
Thank you.